Yo, what up guys? Woods back with another educational video. In today's lesson, we're gonna be going over support and resistance. The feedback on the educational videos have been tremendous. Make sure to check my links down in the description below. You guys know what to do. Let's hop on into the video. All right guys, so I'm gonna start off here on the BTC chart and I'm gonna just put some monthly levels and explain my thought process throughout it. How I like to look at support resistance is candle closures and candle wicks. That's really what I like to think. And the higher the time frame, the more confidence in the play. We always speak about this. Whenever you're on a higher time frame level, it is important to risk according to that level. You know, it's not often that higher time frame levels do get tested, and it's not often that you get the opportunity to purchase higher time frame levels when things get explosive. Right now, things are looking down, but there's gonna be a time again where support is tested, and a logical support level, whether it be higher or lower. And these are levels of importance. So I'm just gonna be putting lines on top of these candle closures and candle wicks on this upside price action here. And I'm gonna go over the reactions that happen around these levels on the lower time frame and why they're so important and what they mean for the market and for your potential positions. All I did here was on the monthly for the run up here, this most recent uptrend from around early 2024, when we broke up and flipped this level, I'm gonna be speaking about this price action. And then later in the lesson, I'm gonna go ahead and speak about what happened before that, back in 2017, when we flipped back up in 2020, and then the 2022 end of the bear market where we flipped back up, and how things reacted around these levels. It's very important to understand why you drew something, where you drew it, and how you're gonna react around it. Let me bring the replay button back. Previously, we had pushed up here way back in 2021, April of 2021. We formed this deviation bottom. I'm gonna scroll down the lower time frame soon just to show you guys here what had happened. If you were in the market, you understand the price action that happened there, ended up flipping that back up and then pushing towards that previous candle closure and candle wick. The reason I like candle closures and candle wicks is because that's where price mattered on that specific day. That's when price was either defended, rejected, whatever the case may be. Significant price happens around that candle closure and candle wick, and it's important to realize that in the past to then help you in your positions for the future. What had happened here was we took out these highs, and if you watch my previous videos and if you see my previous plays and you are a follower of mine, you know how much I like SFPs. We pushed up, formed that SFP, which is a sweep above that high, and a close back within the top end of that wick that I drew originally. Remember that monthly wick that topped it at first. And when we came back and closed below with that confirmed SFP, you had some good conviction to know that there was some good resistance around this level, especially with the time and point of the market and the rejection thereafter. Even if you weren't positioned for that, you had good knowing of your level that you drew previous and why you drew it. That is one reaction that I want to show you guys on the higher time frame there. And then what ensued from that point, we just ended up winding down. The FTX collapsed, Luna crash, 3AC, all that good stuff happened over here. And then we eventually printed the bear market bottom that we broke out of, ran up all the way towards the highs of the previous all-time highs. And as we're pushing towards it, we're ending up in that higher time frame level that we ended up flipping absolutely beautifully. And let me just scroll up in here, show you guys more of a close-up. We ended up flipping this level absolutely perfectly and then pushed up higher. What did we touch up on there? Candle closures and candle wicks, previous highs and previous lows really do matter, and the reactions that happen around it. One scenario that I wanted to explain on that drawdown after the first all-time high push that we had over here was when we rejected down and rejected the middle end of this monthly order block. This was a level of demand. We retested the order block in the middle and flipped it downwards. That was another continuation play that you could have played right there. So lows and highs matter. Which one do you feel is going to get targeted from a specific location, and the reaction that happened around it, around whether it be your supply and demand, your support resistance. These are basic and simple confluences. There was a time where I was teaching support resistance first, but a lot of supply and demand really matter, so I wanted to start off with that. But support resistance, tune in with everything. That's where you really up your bets. That's where you really conduct your business. So let's take it out to the lower time frame on the 1 day to this level over here, which was the level that we just explained on the higher time frame, right, on that monthly time frame. And what happened around this level? The beginning of the price action that we drew on that candle closure and the candle wick on the monthly. This is what had happened when we scroll down on the daily. Pretty choppy price action around there, printed these steep higher lows, rejected, deviated these lows, tested around these lows before pushing back up and making a lower high in price. That's all good confluence for a move down, especially based on momentum. I'm sure if you open up the divergence chart, you could see there's RSI divergences. There was I think quadruple at one point back in the day there, and that is a wild type of divergence to see, especially when we're trading around a level of macro resistance that you drew up in your chart and a potential lower high in the chart after a breakdown of those steep lower highs. We then waterfall down into this choppy price action. Again, if you were on the charts, you remember this price action. I know you do. I remember even the push back up out of that. That was wild to see. And then we eventually pushed back up, and you could see on the 1 day. If I was to focus on candle closures and candle wicks, even on the daily, me knowing my levels, I have good intraday, macro, whatever the case may be and how you look at it, good levels to play and look for in the future. So just like you drew those monthly levels, you could do it on the daily. You could do it on the 4 hour, the 1 hour, the 30-minute, 15-minute, whatever you feel like doing, but it all is relative to the levels we're playing around, the momentum being had in the market, and how you see fit based on your confluences that you use, guys. Because you could have plays where we're looking to flip a daily level and we do for a little bit, then we reject down, end up chopping around, you try to enter and you get stopped before the flip back up and you don't re-enter. It's always important to utilize your confluence, to understand the aspects of the market, making sure you're trying things maybe once or twice or 3 times if you get stopped out around big levels that you anticipated and played around. Put your alerts and wait, be patient, anticipate things happening before they happen. And then we ended up pushing up towards these highs. Remember where we printed that big SFP around this level, but on the 1 day, it doesn't look like that. But there's confluences that you can use around these levels to then base your play. Deviation above the previous highs. We could for sure see a 1 day divergence happening in the price there, absolutely beautifully. And then the eventual rejection before flipping down with some steep lower highs again and having the same reaction it had previous. Past price action for sure dictates the future. I say that all the time. So now what I'm gonna do, guys, is I'm gonna fast forward price action to where this level meets once again there after that price action. We're gonna scroll up on the higher time frame, take you guys back to the monthly so you can refresh your mind on where we are in the chart. Okay, so now as we approach this price action that happened way back in 2017, I told you guys I was gonna speak about it later, but let's just include it as price comes down to it on the crash, see how the support was flipped, show you guys that before we do get into the 60,000 break and then so on and so forth. So again, guys, we're gonna just talk about the top end of this price action, not gonna go too much on the bottom, although I do think it's a good spot to talk about, so let's talk about it. I'm gonna draw this monthly candle closure. That's gonna be where my level of resistance is until it's flipped. That's gonna be, resistance. And once it's flipped, we can anticipate higher. Just like this candle closure way back in 2017. And you could see just how price reacts around it. Again, guys, I taught demand blocks for a reason. We came into that monthly demand block, retested it fully before pushing out. If you guys know my lesson and saw the demand lesson, guys, it's such a powerful tool, but all that looks like is deviation of those previous high candle closures before pushing up, retesting that literal candle closure, the exact point, and rejecting down fully to retest that previous candle closure and the top end of that range that was previously deviated. And then it ended up breaking out and moving up, making a nice candle closure up towards these highs, retesting before pushing up fully. That is the significance of support resistance, guys. I explained it a lot up here. I just wanted to really point that out quick. I'm not gonna go too much on the lower time frame on that. I wanted to show you guys that before we explain the price action that comes further thereafter, because we have a lot to get through now. So we're gonna push down, come towards these wicks. So even though we're not yet retesting the top end of this range, we really don't have to. We retested towards these wicks. So again, guys, your previous candle wicks matter. We were retesting within this wick, deviating down into the level, and eventually started flipping back up. Even if you didn't have a full position, this is something nice to catch for the bottom and a confirmed flip up. Before I push price to go back up by clicking the play button on the replay, I wanted to draw these levels and just show you guys psychologically how those levels were treated. I mean, obviously we already saw how price was reacted early in the video, but now that you have levels drawn, things are gonna look a lot smoother and a lot different. And I wanna show you guys that throughout the weekly, throughout the lower time frame a little bit, but I do wanna get through these levels in an organized fashion. I want you guys to really understand, these are the middle end levels. So this is not where we explained earlier that monthly level of support and resistance. So far it has been treated as resistance. Once we flip it, it's gonna be support. These are the levels that I drew in the middle, and just see how the levels react around it. So we eventually broke out of that level, retested the top end of that wick that I painted out previous, and pushed into resistance. Ended up flipping eventually. You can see here on the weekly, really pushing strong. And it eventually pushed in, closed above, and just look how these levels are being treated. Look at how these lows get defended, eventually push back up after trapping longs, making people probably flip-flop bias, and we get a strong push within the range. Obviously, you want to follow momentum. That's why I say momentum matters. We're obviously targeting higher within this trend here. And then we eventually start to look for a breakout of those monthly highs that we drew before, which is our level of support, and eventually started to flip and break it. And this was the start of the most recent bull market that we're in now. Look how beautifully that level was just broken through, confirmed on that weekly close, and then retested. Just absolutely perfect. Support resistance, guys, it matters. This is how I look at it. Everybody has their way of looking at support resistance, and this is just the way that I do things. This is the way that I conduct business. When you have good confluences to base around that, whether it be your supply and demand, around a good level of support resistance, around a good RSI divergence, some SFPs are forming, we're sweeping the Monday range, whatever confluence you use, guys, it's all relative, it all matters. Make sure you're tying things around these levels of support resistance, and things aren't always guaranteed, guys, so make sure you try things more than once. If it's around your level and you stick to your bias, always have that confluence. That's why I speak so highly about having confluences. So now I just want to fast forward on the weekly, show you guys how this monthly reacts before it eventually flips up and breaks towards the current levels that we're at now. Obviously, we printed that lower high, deviated the level right there, before eventually pushing up, and now we're gonna pause it right there. You see how we ended up flipping that previous monthly all-time high level back in 2021, before the bear market in 2022. We pushed back up and started the most current bull market after trying to flip once, deviating that resistance level, and then pushing back up and confirming the flip, guys. Deep higher lows within the price, and then ended up pushing in, printing this level of demand absolutely perfectly before pushing back up. And I drew this level. This is a weekly high. Again, that was that monthly level that we looked at. Candle closure, candle wicks, all relative, they all matter. Show you guys that level on the weekly here and see how it reacted. See how we pushed into it. People are anticipating a rejection. It rejects and then flips up the level of demand. That's an absolutely beautiful reaction you want to see for a aggressive flip like this. So now I'm just going to scroll back onto the monthly, let this price play out for a second, and just get to where we're at now and explain what could potentially happen. On the previous monthly closure and candle wick that we drew, deviated under, we already painted that on the lower time frame, we came very close to and then ended up having a significant pump from that level. That is the power of support resistance. We don't have to test it fully. We can deviate under the level. All that being said, that level is going to react, whether it be up or down. It's always suggested to do and conduct your business around good levels of support and resistance. And I'm showing you guys here today why it matters so much. The reason I like to touch up so much on the higher time frame is because that's where the significant reactions happen. And you know, it's just the way things are done here, guys. We want to have conviction in the trades we take. All right, guys, so we have all our monthly levels drawn. We went over lower time frame price action, higher time frame price action. Obviously, we went over a lot of years of price action, to be honest. I showed you guys how I react on the daily around monthly levels, why we have our levels drawn, and the time frames you could do it. You can do it on any time frame you would like, guys. And now I just want to go over the current price action and where we are at now currently. And this is the levels that I have drawn. I'm not going to draw too much more in between here on the lower time frame. We went over a good amount here, and how things are happening right now, we'll just explain as we go. So we come very, very close to our level down here. You guys are going to see here on the monthly. We don't have to always tap perfectly. You see how quickly this level was retested, and it did not come right on the level and retested, but it came very close, and that's where you conduct your business at around support. Look for longs. Obviously, resistance is, you know, for selling or shorting, depending on the momentum of the market and where we currently are at. We ended up pushing back up towards this monthly level and then, you know, having strong momentum to push up. And I'm just gonna allow this price to evaluate further. I'm gonna let it play and do its thing and kind of conclude the lesson here and show you guys where we're at in the current aspect of things. I want to go over some analysis, and that's what I'm gonna do here on the lower time frame and give you guys that to close the video at the levels we're currently at. I drew these monthly levels, candle closures. You guys understand why it matters and why I drew it. I'll even draw the candle wick here just to really solidify the lesson, because we talked a lot about candle closures and candle wicks. So these are going to be where our levels of support and future potential resistance is going to be, right, if we lose these levels. So on the monthly, my candle closure, candle wick, we have this wick because on the monthly, this is really all we have. I drew it at this wick right here, and that's pretty much where we're at. I'm going to go on the 1 day here, guys, show you guys what we're doing and what I think, what I feel. We have these lows here that I'm interested in targeting. If we sweep these lows down, I think 96,740 is the level that I'm gonna try for longs. I think that's gonna be a significant level of confluence on what I spoke about today. We didn't trade under this 109,280 level for quite some time, right? The first time we did it, we tried to push above. That's after deviating this level. We came down, retested a second time, pushed new all-time highs before pushing this wick down below, pushing above, holding, coming down below, deviating, pushing another highs and some SFPs above those first bounces, and then eventually making an aggressive lower high, rejecting, closing down below. And now we came towards our first level of support. We had a bounce at 99, that 98.8 level, right? It's not perfect. We slipped a little bit below in the higher time frame, and we had a bounce. We then retested the middle end of the current support and resistance that we drew in the higher time frame, which is also in tune with this previous wick that is your previous lower range structure that we had previous right here. And that's all things to take into consideration. Things are reacting accordingly. We are approaching levels of support. We could tie in this extreme sell-off of the RSI. We're approaching the bottom end here, approaching oversold territory. And these are things to tie in with your confluence. If we lose that level, then my next real level would have to be at around this previous structure flip right here. That would have to be like that 88,000, even towards as low as 89,000 level. And we could potentially deviate here and still look good. It'll still be a higher low in price if we do this price action, guys. There's nothing wrong with having a plan, making assumptions on what you think is gonna happen based off previous price action. We went over monthly support resistance. We showed lower time frame levels around them and how to really play them and make your plans and plays and gauge confluences. So that, guys, is support resistance in a nutshell. Make sure you guys are doing this on your chart. Make sure you're back testing before you even start to add size. I want you guys to get the alpha, and WoodsBot has it. I'm gonna leave a description down below. Make sure to use my referral link for Blofin. You will get full access to all my bots. Take advantage, because support resistance is automated in that Discord, as well as RSI divergences, any conflict you could ever think of, everything that we talk about in every single video. It's automated there. Get your access now. I appreciate all the support. Like, leave a comment down below, and subscribe. See you guys in the next. Peace.